So the CARES Act certainly gave plan sponsors a handful of options to make 401k balances available to employees who are impacted by the virus. And a lot of plans did take quick action to add those features. The degree of offering and usage of those features certainly varied. None of the features were required, and there were definitely a lot of plans that chose not to implement those. And then also a lot of plans that chose to make all of those features available, whether that was because their workforce truly was impacted by the virus or just to give employees full flexibility. From a usage perspective, probably as expected, we have seen the most participant usage of the special withdrawal feature. That's the option where participants can withdraw up to $100,000 penalty free. Now, that is a taxable withdrawal, and the IRS did come out with some later guidance to clarify the tax situation there, perhaps to the disappointment of some who hoped to defer those taxes. So, participants can either pay all of the income taxes on that withdrawal this year for 2020, or they can spread those taxes evenly over the next 3 years. So, paying them across 2020, 21, and 22. There is no option to pay all of those taxes in the third year in 2022. So certainly we did see some evidence of abuse of this feature, perhaps participants who thought, hey, I'll do this withdrawal, I'll repay it in 2022 and never pay taxes on it. And unfortunately, that's not the case. If someone wants to repay the full amount in 2022, they're going to have to refile their 2020 and 2021 taxes to get a refund on the income taxes paid. So definitely seeing the most usage of the withdrawal feature, but not overwhelming usage. That definitely varies across industry and across plan. We definitely have had some clients who have been disappointed by the volume of usage. Since this is a self-certification process, participants don't have to demonstrate how they are impacted by the virus. But the usage levels generally not overwhelming. We haven't seen many plans that have had much more than 5-10% of participants taking advantage of this withdrawal.
So from a top down level, we've seen just generally good behavior here, or have we seen a lot of abuse here?
I would say it's varied. The majority of plans, I would say we have seen reasonable behavior, not significant evidence of abuse, but there certainly are a handful of situations where it's pretty clear that there's been some abuse of the feature with just given the size of the withdrawals as well as the speed and of the withdrawals after that feature has become available, and relative, of course, to the employment situations and the health situations for those locations and those employers. The other key feature in the CARES Act was the special loan feature. That feature actually has expired now. The withdrawal goes through the end of this year, but the loan expired here at the end of September. We saw very low usage of the special loan. Not many participants taking advantage of that opportunity. Separately, there's the ability to defer loan repayments that are otherwise due in 2020. That remains an option for plans that chose to offer it through the end of this year. And there really hasn't been any talk in any of the ongoing government discussions about extending these features. So we do continue to expect they'll fully expire at the end of 2020.
Well, as we sit here today, I think they're at the end of September, we're awaiting the potential for another stimulus bill. Do we think, or maybe look in your crystal ball and tell us what you think perhaps might there be extensions of any of these current provisions or any new provisions we might see?
Yep, no discussion to date. So ongoing stimulus talks have stayed away from 401ks.